Today I have the privilege of sitting down with my divisional manager, Michael Harrison. Michael has helped lead one of the fastest growing organizations in the mortgage industry. And today we're talking about leadership, we're talking about CMG, we're talking about the future of Bank CMG and why loan officers across the country are paying attention to CMG. I have the awesome opportunity to introduce my man, Michael Harrison.
Simeon, thank you, my friend.
Glad to have you here, brother.
Happy to be here.
Michael, tell everyone a little about your journey in the mortgage industry and what experiences has shaped your leadership here today in the mortgage industry.
Thank you. I started in the late 90s as a loan officer at Bank One Financial Services. I was kind of a direct consumer LO at the time. I had a stint as a broker for a while, and then got directly into kind of captive lending with Send It PHH as a regional manager covering the franchise platforms plus the company-owned version. Had a stint at a company called GMC Home Services, and I set up JVs all over half the United States, eastern half the United States outside of Mississippi River. And then what moved me back into, I really wanted to get back into retail lending. I love people, I love growth. It would just fit me better. So I actually made a move to National City Mortgage back in the day with National City Bank. And that's what brought me to Dayton, Ohio 20 years ago. So I've been in retail lending ever since then. I was regional, divisional, probably the last 20 years, and just really love the leadership component of what we do. With my role, I kind of had the opportunity to kind of develop strategic direction and focus on growth and macro pieces, but I also love getting in the field, like I was today in a recruiting meeting, and I just love sitting down face to face with loan officers. And my job is really just it's not really a sales process, really. It's more of a matchmaking process from a growth and recruiting perspective to help those people, because not everybody fits what we do, and they may be better fit somewhere else. But that's kind of how I got into face-to-face lending. I've been at now CMG for a little over 3.5 years. It's been an incredible run. I am just incredibly blessed to have a great team with me and beside me, both on a sales and ops support, and just partners that we're hiring into the field and the team like you and Loren and others that, if you hire the right people, they tend to make you look pretty good. So I think a lot of my leadership came from my father, frankly, who was a superintendent of schools for like 15 years.
Oh, wow.
And so I had a great example with my father, how to lead people, be a servant leader, kind of a mentor coach. And I think a lot of people that know me, I sound like I coach a lot, and I used to do some coaching, especially with my kids, and that's been fun. I think one piece of advice that my dad gave me that I've always never forgotten. I said, when I got my first manager job, I asked my dad, I said, what would be your best advice? As he'd been a superintendent of 15 years. And he says, hire people who are as good or better than you, give them the tools and resources to win, and get the heck out of the way.
Oh, wow.
So that's been really a focus point of myself. I really, when I'm interviewing the individual, I interview the person as much as I do the resume, really just gauging, are they good fits for us organizationally? I really judge their heart, where their heart's at, and what their intent is and what they're hoping to accomplish. I think if you do those things, you can still miss on occasion, but not as frequently as you maybe could. So that's been kind of a focal point from a leadership perspective. It's really all about servant leadership and helping other people win first, because if they win, then we'll win.
So it sounds like your dad was very instrumental in your life.
He was, yeah. Actually talking to him on the way, my drive over, just checking in. Now he's a little older, so now, it's great to talk to him and just reconnect on those things.
I can concur. I grew up in my dad's barbershop.
Yep.
That was very phenomenal for me.
Yep.
So let me ask you a question. What made you choose CMG out of all the mortgage companies that are in this country? Why CMG?
So from the company I was coming from before, a smaller regional player in the Midwest, I just saw the dynamics changing in our industry, and I thought size and scope of capability, diversification of resources and lines of business that would allow you to have some strength in a challenging market. I think what attracted me to CMG was probably the people, which I always look at first. Is this somebody I trust, somebody I like, think similar to you? And Tony Giglio, who's our national sales manager, is the one who hired me. And if you know Tony, everybody likes that guy. You just could trust him out of the gate. And, when I sat down with him, his approach was very similar to mine. He just said, hey, for you to win, what do you need? And I said, hey, I need to win if you give me 1, 2, and 3 of these items. He said, done.
Oh.
And he's supported all of that the entire way. I mean, he still holds me accountable to the result, but he's been a great partner to kind of get me going at CMG, because as you probably know, when we came into the Midwest division, there wasn't a whole lot here. And so I knew that it was going to take a great team behind me, deployment of a lot of resources, both in talent acquisition cost as well as branch expansion.
Right.
Those are not free. And so I appreciate Chris George writing those checks to allow us to get there. And, they expect to get a return on those investments. And I think we've delivered that so far. And we certainly have a great opportunity to continue to grow in the states they've given me. But that's kind of what attracted me to CMG. You hear the word culture a lot. It can be overdone a little bit, but I just think there was a trust. There was a kind of a kindred spirit that kind of looked at the world the same way. And, he has delivered on everything I asked him to deliver on. And you also, I think, when I look at leadership, I always felt like now I have a different boss as well with Tammy Turner, and I trust them. I think they've got my back. I trust them explicitly. And I think if you can go to war in this market with those people behind you and the resources all the way to Chris George, just do the work. You're going to get the result.
Right. I got to say, my personal experiences when I first talked to you and I met Chris George, everything that you're saying lines up, because I never saw an organization where I actually liked all the people I was talking to. So it was great.
Yeah, we got some great people, no doubt about it.
No question about it. If a successful loan officer called you today and asked, why should I leave my current company for CMG, what would be your answer?
Well, and maybe I'm a little play favoritism here, but I think if you look at the industry today, I mean, there's a validation of not just our division, but the company-wide. We're growing like nobody else in the industry is quite the same. When I got here, I think CMG was ranked top 25, top 30 nationally. And then now I think we finished at number 3.
Yep.
And the growth has just been incredible. I don't know if I've ever seen the growth like that, but if you do it the right way and you provide a significant value proposition to our loan officers that are coming in, I think that validates the growth. So as you know, you're part of our manager calls. I think the year-over-year growth is probably the greatest scoreboard, and the scoreboard, tells a story. You may not like what the scoreboard says, good or bad, but the scoreboard doesn't lie. And so I think our scoreboard is just great. I would stack CMG's value prop with anybody in the industry, and I think the growth and the scoreboard that we have kind of validates that we're doing some pretty cool things.
You said value prop. So what separates CMG from any other mortgage company in today's market?
Yeah, great question. Well, I think it starts with Chris George. I mean, he's the largest single owner independent mortgage banker in the country with no outside private equity, no outside partnership. So when you think about kind of the spirit or the heart of the organization, it really starts with him, and I think it permeates the rest of the organization. So this is, as you know, he started as an LO in his garage 30 years ago in California. And I think how we attack the market, how we grow, really is a result of the heart of an LO. And I've said this, I think to Chris, I've said this to others, I think when you're around him, I still, 3.5 years into this, I still sit in amazement of the humility of him, where there are other owners that are, $1 billion plus size companies that don't have that humility, and I appreciate that. I think that's huge, and there's another side to him. There's a curiosity to him. He uses that word a lot, and I think I see it the same thing. He's kind of like, and I say this in love, there's like this kid in a candy store. Like, oh my gosh, I can't believe we get to do this. This is fun. Let's try this. But I think it's all done from the heart of an LO, trying to figure out the best formula for our success. And I think it attracts the right people, frankly. So I think those are things that are really important. I'd say the second piece to me that was really attractive, because I wanted the size and the scope of our resources, because I thought it would make a difference in the market. I don't think vanilla can win like it used to, right? You've got to have some unique products. I know we're going to talk about the all-in-one a little bit, and home funded, and some of these other incredible proprietary products we have beyond the vast suite of products, 950 plus products.
Correct.
I think if you go to market outside of just the traditional conventional 30-year fixed, it's hard to separate yourself from the crowd. And I think that is a game changer for us. And I think, if you look about the structure of the organization, with retail is our king, right, of what we do to grow. We do have a wholesale correspondent channel. We do have a JV channel. We have a securities desk that allows us to go to market with proprietary products, because we can create mortgage-backed securities on the secondary market like PLS and send it to the market. And then you throw in, I think, one piece that is a missing opportunity for some IMBs that we have is servicing. We have in-house servicing. Now, in the Midwest, you and I both, that matters to people in the Midwest.
Sure does.
If they do business with Simeon Williams, they want a deal to stay with Simeon Williams, because they chose you, not CMG necessarily. So I think we actually deployed last year to our own in-house retained servicing platform. So not only can we take better care of our customers, not just short-term but long-term, because they're staying in our house. But I would also say the diversification. I think last I think I heard, we have somewhere around 70 to 75 billion in retained servicing. Well, when you look at a market that is pretty flat, right, pretty challenging, as you know, the last 3 to 4 years have been pretty hard, and the margin compression is real. So every deal is a night fight.
Right.
It really is hard, and so you got to dig in deeper. You got to sell. Sometimes you have to take a pricing concession, and so if you don't have anything to counterbalance that from a profitability perspective, it makes it really hard to turn a profit. So that retained servicing, I think, generates some revenue on the spread between what we've retained versus what the market's charging. And I think that fuels our growth. I think that gives us a counterbalance to be lean and mean around pricing and ops and sales support and just all those things that I think are important for us to win. So I think it's got to be a combination of all of that. So I think that diversification of channels and resources are huge for us. We don't really see a lot with that. We just feel it in the field in regards to our ability to win deals.
Right. You know what? What brought me to CMG was the diversification in the products that we had.
Yep.
But I got to bring up one. I talk about it every Tuesday. It's the all-in-one.
Yep.
And Michael actually personally has an all-in-one mortgage. Can you tell some of our viewers how this has changed you in reference to personal financing and mortgage, combining the two?
Yeah, it's definitely a paradigm shift, as you know, as you've gotten pretty up to speed on the product set. It's a first lien HELOC, right? But it is a cash flow product that allows you to go directly to pay off principal versus interest. And so when you look to a side-by-side comparison of a 30-year fixed amortization, dollar for dollar, it's probably going to pay out about 50% quicker. And so actually I bought my first experience of the all-in-one was I bought an investment property down in the Carolinas that I'm renting back to my daughters, and it's a great investment product from that perspective. But it is I've been in mortgage banking for 30 years. There's still some aha moments about it, like, wow, this is really how it works. Now, the all-in-one's not for everybody. As you know, you have to have a little bit of extra cash coming in. You can't be living really paycheck to paycheck to get the benefit of it. But it's really a cash flow product. And for the right person, I think it's unbeatable. And I think I told you on the phone, I will not have another home or mortgage without the all-in-one. That is absolutely the only product I'll use, because I don't think you can beat with any other product at the end product of paying it off. If that's the goal with your cash flow, it'll just knock out the principal so much quicker than what you would on a traditional AM. So it's a bit of it's a paradigm shift. And I think for the normal customer, and I've been with it now for almost a year and a half, almost 2 years, it still is like this aha moment about, wow, not only is it working, but it's just as compared to the traditional product. It's so unique, so different. And it's nice to see that we've got a proprietary product that you and I can go to market and really separate ourselves with the right customer. And it's pretty unbeatable relative to that piece. So that's been my experience so far.
What's the biggest misconception about the all-in-one, you think?
I think the hardest part is customers have been trained to look at the rate only.
Correct.
They translate that rate with the value of the mortgage instrument. And if you can get past that piece, because I think my mortgage, is probably a little over 7.25, and that's higher than the market. But if you take the emotion out of that interest rate piece and say, let's look at the numbers. Let's peel all the emotion. Let's look at the reality of what a side-by-side comparison, which we can provide for a customer. And then you go and say, wow, I know this is at 6.25, this is 7.5, and this is going to pay off 10 years quicker. And you just have to see it to believe it. So I think that's the biggest misconception is you look at rate and you say, well, gosh, this has to be worse than a 6.5% 30-year fix. Well, if you look at what your goal is, that's why we need to, when we do our consultation to our customers, what's the end goal here? What are you trying to do? And if it's a good fit, it's unbeatable.
No question about it. I think the greatest thing about the all-in-one is the education piece.
Yep.
Because once you show someone, like last night I showed someone had an interest rate of like 5.5 and they had 28 years left. Michael, they were spending $497,000 in interest over that 28 period.
Yep.
And we cut off, I think we cut it off to, I think it was like 175 interest that they would pay through the all-in-one. It's incredible.
Now, so unless they see it, they don't believe it.
Exactly.
So I think that's why I think they have the all-in-one calculators to kind of do a side-by-side, and it's really a cash flow product. And if you will take the time to get educated as a consumer on it, and you've got a little bit of extra cash to play with on cash flow, you can't beat it. It's mathematically you can't beat it. Mm-hmm. So that's the hard part, is just to getting to that point of education to see it, believe it, and be able to deliver it for them.
Right. I'm going to switch topics real quick. I'm going to talk about leadership and recruiting at CMG.
Sure.
One of the things I've seen, and you've said it so many times, we're one of the fastest growing IMBs in the market, but also Bank CMG is coming.
Yep.
So I got a question. What made the decision to recruit Simeon, the mortgage man?
Yeah, so I saw that, and I wanted to give some thought. I said, man, he's a really good dude. So I would go back to a comment I made earlier. I think when I will not interview somebody unless I can either get in person with them or do a Teams call, so I can actually kind of break bread together with them, right? And to look them in the eye and just kind of check them out as a human being, mm-hmm. right? And so I think what was very evident to me is I was watching how you engaged us, how the questions you asked, that you were very thoughtful relative to your homework coming in. And it was very clear to me you weren't interested in just getting a sign-on bonus check. You were interested in the best fit and also the best opportunity to be the best loan officer that you could be. So that was really important to me. That's a lot. It's shocking how few recruits that I talk to that don't do any homework, or they say, well, tell me about CMG. Well, why didn't you do any homework, right? I mean, we should be at second and third level, 4-level questions relative to us if you're really taking a hard look at us for the right reasons. Beyond that piece, I appreciated and respected the investment of time that you spend into the homework. Is really just you as a human, right? I mean, obviously I can pull all the data of what you funded or not funded, stuff like that, and that's relevant. Obviously, you're not going to get a seat at the table if you can't do the business. But I think I was just gauging, do I like you? Can we work together? Could we partner together to get you where you want? Understanding what you're hoping to accomplish within your business, because if you come to me with an idea I can't deliver for you, then it's not a good fit for you or us, because I can't give you what you're looking for. So, just in talking with you, I could tell you were professional. I loved how you presented yourself, but really I was gauging your heart and what the intent of moving to CMG and what it would mean for you. So when I look at tough situations I'm dealing with as a division manager or recruiting, the view's still the same. Mm-hmm. I'm evaluating your heart and your intent, and the delivery, about any delivery I can deal with. I'd rather have nice delivery than not necessarily. But at the end of the day, if those two pieces are in place, we're good. And so I think for me, it was just, is this a good fit for you? Is this a good match make for both sides? Can we create a win-win? And certainly St. Louis is an amazing market. We have a lot of opportunity to grow this market, and we needed somebody that we could believe in and build behind. And, we're excited about the opportunity to get bigger and better and stronger in St. Louis and Missouri.
Gotcha. I didn't pay him to say that either, just so you know. But one of the greatest things when we met, I was already sold because I met so many different employees who've been there for years.
Yep.
And one of the main comments they kept making was, I'm retiring here. I'm like, hold on, what did you say?
Right.
I'm retiring here. And I was like, oh, wow, this is different.
Right.
So by the time we talked about financial and all those things, I said, I see the long-term benefit in this.
Yep.
It's something that I can honestly say I'm going to retire here. I love it at CMG.
Yeah. And I think when we look at that, we're trying to, from the matchmaking process, I think it's evaluating, are you doing it for the right reasons? Is this more than a 1-year decision or 2-year decision? Is this, as it sits today, is it the best opportunity for you to go where you want to go? And I think that's a big part of it. Now, the industry can change, right? I've been at companies that have been bought, and it changed everything. And I don't think that's going to be our case with Chris George here by any stretch. But, there's circumstances in our industry that can change. It happens all the time. So I think where we're at today, man, and I've shared this there, but I think the next 5 to 7 years at this company is going to be absolutely spectacular. So I think you and I just hold on for dear life, and the ride's going to be pretty fun.
I know. So I got a question, and you said it several times, we're growing here in Missouri. So what makes Missouri team unique, and why should loan officers consider joining us here in Missouri?
So honestly, it's you and Loren. To be honest, I think you put you guys behind them to support new LOs coming in, and that CMG, it's an unbeatable opportunity. All right, there's just no way you're going to lose coming here with the resources we have. But we've always believed it's about leadership, and we're not going to open a new market unless we have leaders that we can build behind. So when I think about you guys and if I hired an LO to put underneath you guys, I would walk away with incredible confidence. You guys are going to coach, mentor, love on them, and they're going to succeed whether I help them at all, because I know between you and Loren, that's going to happen. So I think that's a big part of it. I think it's the confidence I have in you guys to grow the market, and I'm just, I'm happy to help in any way I can, but at the end of the day, no matter how good or I maybe could be at recruiting, if I don't have leadership that can help them locally in the market, doesn't really matter, right? You don't have a one-off LO in the middle of nowhere with no leadership or support, doesn't really matter either. So,
what are some of the qualities that you look for in loan officers?
Well, as a former athlete like you, I think I love LOs that are competitive for the right reasons, right? I just like competing. Generally, if you have a competitor, they're really hardworking. History tends to repeat itself. If you've had some success in your past, it's likely that you'll have success coming here. So when I have people that have shown and demonstrated success and tenures that were successful in other places prior to CMG, what gets me excited, and I had some recruiting meetings earlier today, is meeting 2 individuals today, and I can look them in the eye and say, if you do what you're doing today at your company, you'll do more here. And I know that. And so that to me is kind of exciting. I think we talk about the year-over-year growth piece, and I just put out a stat to the entire team. And about 80% of our team is up year over year in a really hard market. And that's what makes me proud, happy, gives me joy, because that to me is a representation of the value prop of CMG, leadership and supporting loan officers to grow their platform. And this is really an LO company, right? It's the heart of an LO at Chris George, and how we manage is really around the LOs. And I think that's what makes a difference. We have sales and ops as one team. It's not sales versus ops, and we're not confused about where the revenue is generated in our space. So if we help our loan officers like you be successful, then we can do these other things that we need to do behind the scenes to support you. So I think that's when you have that singularness of focus on loving on, hiring the right LOs and loving our customers and referral partners. Man, it's hard to lose situations like that. So
we have so many successful loan officers,
incredible
teams.
Incredible.
Just watching the weekend and months. Year over year, just watching what people are doing, man, it's exciting.
It is.
Unless you can't go to sleep, you got to keep going at it. So I got a question for you. Where do you see Bank CMG in the next 5 years? You always talk about that.
Yeah, as you probably know, we're kind of embarking that journey on that piece. We bought our first, not me, but Chris George bought our first bank in Wisconsin. So we had some team members and branches that rolled into the Wisconsin market. We have more that are coming. They just completed their second bank acquisition. So I don't know everything that's going on relative to the growth. I just think there's two things that are likely going to happen. I think one, we're going to continue to grow the bank. So whether that means expanding the existing bank that they have, I anticipate there'll likely be more bank acquisitions as we grow. And I think ultimately, if you had a conversation with Chris George around Bank CMG, I think the goal is at some point in time to build the bank to a big enough size that you could roll all of CMG Home Loans through Bank CMG. So, what is that 5 years from now, 10 years from now? I don't know the answer to that because I'm not at the top of the house that's making those decisions on acquisition, but it certainly directionally makes a lot of sense. When I look at the bank value prop, as you already know, the one piece that's very attractive, especially on the IMB space, is we've got 50 state licensing exemption from a federal level. So we get to go through all that state renewal process every year. It's manageable. It's kind of an inconvenience, and it costs some money, right? So I think one thing that's really attractive is the exemption of 50 state licensing, which federally licensed banks have. So that's one. I think the other piece that's going to come down the pathway, as we develop some other products that we're working on now. That will give us more proprietary product, maybe some unique bank products that we can go to market and win that others don't have. So I think that's coming our way. And then the other piece too is as we grow the bank size, I think it's going to give us some access to Fed window of depository revenue versus maybe the warehouse spreads that will allow us to be even more competitive on a pricing side to win deals that maybe, if we're going toe-to-toe against other banks. So I think those are the big pieces. You're talking about licensing, 50 states, and product differential and pricing flexibility. I think those are pieces that I think at the core are really going to drive Bank CMG's growth and transition into more of the, the IMB space. So I think we've got that strategy kind of built for that. You just need the bank to get big enough because we're now, a $30 billion IMB. And I don't know the exact metrics, but you've got to have a pretty good sized bank to roll all those in. I don't know if the numbers are 40 to 50 billion depository, but it's probably somewhere in that range. So I think directionally that's where we're going. 5 years, I think we'll be further down the pathway. Will we have everybody in at that point? I don't know yet at that piece, but it'll really depend upon the speed with which the bank acquisition begins.
I want to tell everybody which states you're responsible for. Obviously, it's just not Missouri.
Yeah, so I have 12 states total, all the way from Minnesota down to Missouri, over to Arkansas, and then up through Michigan. So most of the Midwest, I think we have branches in 11 of those 12 states, so we still have some growth opportunity. But we've certainly made a dent. As you know, we've added about $1 billion in new funded production in 3 years. So I think we're pretty excited about that. I knew it was a team effort. It's not anything that I've done special. It's other than the opportunity that Tony and Chris George gave me, 3.5 years ago, and they've delivered on the support side. And, thankfully, the CMG value prop travels well. And it's very attractive to a lot of people. So you're seeing growth not just in the Midwest or my central division, but also company-wide. So it's not isolated to here. We're growing everywhere. Right. So I think that travels well. And I think from a national perspective, we now have a lot of credibility, right? So we've kind of turned some heads relative to who is this CMG crew, and going from 25 to number 3 in less than 3 years is pretty unparalleled.
Yes.
So, and we're doing it the right way with the right people.
Exactly, and that's why I love our leadership meetings. Every time you go over the numbers, and it's just about numbers. We talk about every practical thing that we deal with every day, but one of the things I love is that every month we always talk about, we're going to break another record this month, and we're going to break another record this month. So that's just great.
It's fun.
So last question I want to ask, what's one thing you want every customer and every loan officer to remember about CMG after watching this interview today?
Yeah, so obviously we value the customer, right? We're going to go to war with them to get those deals to the closing table. You got a great support people, both sales and ops, to help on that piece. But I think it's all up front. If we do a great job, like you do on upfront consultation, and it's really, to me, it's a lifetime opportunity of a partnership with a loan officer that's always looking out for your best interest. So not only are we going to take great care of you now, but we're also looking down the road. Hey, what are your changes? What are your needs going to be 5, 7, 10 years down the road? Can we help you along the way? And so I think the goal is to be a LO for your lifetime. And if we do it the right way and we take care of the customer and we put them first, and we deliver on their expectations, chances are they're going to use you again, and they're probably going to refer you to friends and family. And so I think at the end of the day, I think our goal is not only are we an LO sales culture, but we're really a customer-centric company as well. That if we do a great job, we know that it's going to likely come to another deal because we did a great job servicing the customer. So I think between hiring the right LOs that are doing the right things every day, taking great care of our customers and their referral networks, and then our referral partners are also equally important because they tend to refer people that do a great job of their referrals and are those customers. So that's what I would like them to think. And again, I think we have such an incredible suite of products, a lot of which we've addressed today. There's just really nothing that we can't do that would take care of you. So I think our job is up front, knowing we have those tools and resources. Walk me through what you're hoping to accomplish. Tell me the things that are important to you. Tell me of what the short-term goals are and the 5-year goals are, so that we make sure we've got the best product for you today, and we can grow with you in our relationship to be a lifetime of an LO for you.
No, that's good, Mike. Michael, thank you for investing in our company, believing in our people, and joining me today. If you are a loan officer looking for more opportunity, better products, and leadership that invest in your success, we'd love to have a conversation. And if you're a home buyer looking for a mortgage strategy, not just a mortgage, give me, Simeon the Mortgage Man, a call. Until next time, you already know how I end this. Everything Simeon touches turns to salt.